Good afternoon, everyone. It is Monday, August 23rd, and this is our second installment of our video blog. Again, low production quality. It's me with my cell phone, just talking about news events that have impacted the markets in the past week or so, and maybe also diving deeper into some questions that we've gotten from clients in the past week. This one's a little tougher to talk about and get into because I think it's highly emotional for a lot of people. I know it was for me when you see the images of what's happening over in Afghanistan right now. So I'm going to remove any comments on policy one way or another, and just talk about really three things. Is first, the short-term impacts of the financial markets based on what's occurring over there, intermediate and long-term effects potentially in terms of the United States' position in the world, and also specifically as investors, the role of the US dollar and the Treasury. And third, talk about the possibility of a tail event coming from this. And when I say tail event, I mean something occurring that we can't quite foresee or can't quite attach a probability to this point. So I'm going to dive right into it. Last week, all things considered, ended up being pretty quiet. We came in on Monday, the equity markets anyway were weaker early in the week, and that makes sense in times of uncertainty. What do investors tend to do? They sell what they perceive as risky assets, and they buy the safe haven asset, which is the Treasury. And that kind of balanced itself out by the end of the week, where you had stocks last week were marginally down. The Dow was down about 1%. NASDAQ was down less than 1%. Treasury bonds have firmed up a little bit. But in the short term, at least from a financial perspective, despite everything going on there, not much happened. And I think that makes a lot of sense because Afghanistan, very small economy, and if they are pulled out of the global system, does that impact the earnings of Microsoft? Probably not. Does it impact the earnings of most of the S&P 500 companies? There's a few that it might, but generally speaking, probably not. So the short-term impacts were marginal. In an intermediate sense, one thing I thought about, and we did get some questions about it also, is what does this mean for the U.S. dollar? Because right now, as U.S. investors and people living in the United States, we have enormous benefits from investing in the reserve currency of the world in terms of the US dollar, and also really the main store of value for the world's excess capital, which is the Treasury bond. And in the intermediate term, are any of those things called into question? And my answer would be probably not. Just from a perspective, you look at how big and massive dollar trade is. You look at how big and massive our economy is, even relative to China, which is obviously coming up, but they're still quite in the distance from us. From a trade standpoint, to give you an idea, 60% of all global trade occurs in US dollars. China, despite all their economic might and their industrialization over the last couple decades, about 2% of global trade occurs in their home currency. And so, we're not really, I don't think, in a position where the dollar is going to be supplanted anytime in the near future as being the reserve currency of the world. You can look to the euro, and they've got a big, deep currency as well. But you really need that bond market to back it up. And right now they don't have that. And what I mean by that is this. The euro, obviously, you got a big currency, you have a common market there. But France, Italy, Germany, they're all pursuing their own fiscal policies. They're all issuing their own individual bonds. So the debt markets over there are very highly fragmented. So it's not competition for the Treasury because there's not the depth, there's not the liquidity. There's not the pure size of the Treasury market. The Treasury market today still remains the only place where globally you can dump billions, if not trillions of dollars, and the market is big enough and liquid enough to handle it. So again, I don't see any time in the intermediate term the dollar being the sole reserve currency of the world, the Treasury being the store of value for the entire planet. I don't see that called into question. The third question is really, what we see going on over there, does it increase the possibility we could get some of these tail events? And what do I mean by a tail event? Tail event would be something that we don't know about, and we don't know we don't know. It's like we don't know what we don't know. So it'd be something that comes out of left field that we don't know about. 9/11, classic tail event. I was down in New York, 4 blocks away from that, and I can tell you none of us expected that at the time. COVID, classic tail event. If we sat down the tail end of 2019 and I was asked anyway, what are some of the things on your radar for 2020? A global pandemic was not one of them. And so those tail events are things you can't statistically assign a probability that could occur to it because you just don't know what it is. Nature abhors a vacuum, and we've definitely created a vacuum over there in terms of our withdrawal. Now, what happens in the wake of that is the kind of thing that I think about, and what are some of the tail events that could possibly occur from that? Is it an emboldened China now moving across and being active or aggressive toward Taiwan? Is it Russia perhaps making inroads into Ukraine? Is it is it now a safe haven again for terrorist organizations to train and cause us problems here at home? Those are the type of things that I think about in the wake of this. Now, from an investing standpoint, this is where it gets a little more challenging, because you really can't invest for a tail event because the probability of these things are so low. And let me give you an example of this. Had you invested for COVID, the tail end of 2019, the markets don't even always respond how you think they might to tail events. So you would have ended up into 2020 actually missing a horrific year for a lot of reasons, but actually ended up being a pretty good year as an investor. So you can't invest for these tail events because you don't know what they are and you don't necessarily know how they're going to impact the financial markets. But what it means for me anyway as an investor is for sure we'll be looking a lot more closely at what the news is coming out of Asia for a couple of reasons. First of all, like everyone else, I think I really care about what's going on over there, but also you want to see if all of a sudden some things come into clarity that may be occurring over there. Is there a way that some of those things could impact us moving forward down the road? And so I think that right now, again, to summarize what I'm saying, short term, the impacts to the U.S. financial markets really negligible in terms of what's occurred. Intermediate term, again, I don't think there's a big change there in terms of the role of the U.S. dollar, the role of the Treasury in being the reserve currency on the planet, and also the only market in the form of the Treasury that is big enough to be the store of value for the world's excess capital. It's that third piece that I'm probably looking closest at is there a change in the likelihood of something occurring, quite frankly, that we just can't see yet? I think that's probably a little bit more possible, which is why anyway I'll be watching the news that's coming out of there a lot more closely for sure. If any of this, if you stay with me for 7 minutes, thank you. If any of this raised any questions that you want to speak about a little bit more in more detail, we'd love to talk about this. We talk about this stuff all day long. Otherwise, I hope that if you watched again for this long, thank you very much, and look forward to our next installment. Have a great week.